In today's video, I'm going to tell you guys how to combine fair value gap and order block to get the best opportunities in the market. So if this is something you love to learn, please stay to the end of this video. You're going to learn a lot. Now, before I go to today's lecture, please make sure you subscribe to this channel, like and share this video to your friends who are interested in trading. Now, to understand how to use these things, the first thing you need to understand is the smart money concept. I have a video of smart money concept. Please, you could go and check it out, and do not worry yourself that much. I'm going to do a little bit of explanation here, but if you need more blends, please go and check it out. I'll be leaving the link for that video. Check it out, the whole thing about smart money. I think I have like 2-3 videos on this channel about smart money, so you can go and check any one of them out, or you can check all 3 out to get better understanding. So let's just go straight to the point. Now, to get the best opportunity in the market, or should I say when the market creates a break of structure, when we are having a reversal, it creates an opportunity for you to take trades on an order block or a fair value gap. Now, what am I trying to explain? I said if prices makes a bullish structure this way, now if it's reversing, it gives you an opportunity to buy at a fair value gap, which is somewhere around there, or slip through to the initial order block before going in its intent direction. Now, that is very simple. What I'm trying to say is that if a market makes a break of structure to this upside here, now when reversing, it gives you opportunity to buy here, which might act as a what? A fair value gap. Okay, so this might act as a fair value gap. Opportunity to buy here, which is the what? Initial order block area. So what am I trying to say? That if the prices returns back, it can slip through into this area, break through, or come down a little, then go in its intent direction. And all these things I've explained for you, or all these things I explained to you right now, you're gonna see it live on this chart. Now, this doesn't matter if you are in a bullish situation or a bearish situation. So it works for all situations, be it in a bullish situation or a bearish situation. So in a bullish, this is a bearish situation, so you could have the same pattern there, or you can have the same pattern in a bearish situation. You can also have it in a bullish situation. So let me just take this out and let me look for classic opportunities to explain these things better. Now, I said it earlier that an opportunity gives or a trade that makes a break of structure gives you an opportunity to buy in a fair value gap or on an order block. What is a fair value gap? A fair value gap are inefficiency in the market that prices failed to fill up, and when the price make a break of structure or an expansion, you know, so many people will call it that the market was consolidating at this area. Some people will say it was consolidating, broke this consolidation area to form a break of structure. Okay, I'm coming, let me take it out. Okay, so some people will say the market was what? Consolidating, broke this market structure area, or this area where it started consolidating from, form a break of structure, which this break is called an expansion. Then we have a retracement before the market start going in its intent direction. So some people might say this is a consolidation area where the market is trying to build up momentum to make a drastic move. Okay, so it's trying to build up momentum. Probably sellers are trying to place their order at a particular region, and or buyers are trying to accumulate at a particular region. Any which way you want to put it, we're still going to have an expansion before that retracement. So it is consolidation, expansion, retracement, then it goes in its initial direction. That is what the market will always play at all time, any given time. That's what you're going to see in the market at all time. Look at it here. You can see this area. We can say this is your so-called consolidation area. We can say this is your expansion area. Then this is your retracement area. Then it continues in its intended direction. What I was trying to explain at that region. Okay, so that is what the market is going to produce at all time. The market must first consolidate, expand, retrace before it start going in its intended direction. Now let's put all these things I've said on this chart without wasting much of your time. So let's look for a nice consolidation. So this makes up a nice consolidation. So, and like I said, it broke this structure, so we're going to tag here as a break of structure. So we tag here as a break of structure. Okay, so after that we had this classic expansion at this region. Yeah, so this is the nice expansion that we have at this region. Now there's something wrong with this expansion. The expansion was not that good because everything that happened within this range, so we will not call here a valid retracement. So but the expansion is valid, but the retracement is not valid. Okay, the retracement is not valid, so we wait for prices to leave that region, okay, that region, and give us a better one around there. So this is a better retracement. Now let's say we'll put we're looking to take trades. Yeah, so we're looking to take trades. Now the first place we take trade is this area, so I like calling this my area a fair value gap or an inefficiency area. So we just tap it this way. Then the next area to look out for your trades will be this nice area, but then prices did not get to this area, it just stopped at that area. So let's see what went on in this area. Okay, let's see what went on in this area. Now what we'll do is that we're gonna check out these trades in 2 time frame. The first one is going to be the 3-minute time frame, and the next one is going to be the 1-minute time frame. So let's start with the 3-minute time frame. Now there's something I want to explain to you before we go into the 3-minute time frame. Different patterns of taking trade. Now in a situation like this, some people might want to take their trade this way. When prices tap to any of this our region, they might want to take it the traditional smart money concept. Means they want prices to break this last break of structure here, this little break of structure, which is in the inner time frame or the lower time frame. Break it down, reverse to this neck region without breaking this up, then come down. Now some people want to do it this way, while on the other side some people are looking for a flip zone. Okay, means if prices get to that area, they just want to see prices just come down a little without even breaking that down part, reverse without breaking this up, then just come down. Okay, and this is the pattern I use. I don't use this anymore. I use this. I used to use this back then in 2024, but I don't use it anymore. Oh, should I say back then in 2024? No, back then in 2023, I don't use it anymore. So this is what I use right now from 2024 to 2025, where we are right now. So let's take this out and let's use this. Okay, now let's head over to the 3 minutes time frame. Okay, like I said, we're going to use 2 time frames. Okay, 2 time frames. We're going to use 3 minutes time frame, and we're going to also try to use the 1 minute time frame. Let's see the ones that work better. Okay, you can use both time frame. You can combine both time frame and lap your trades. That's if you know about that. Okay, I do it a lot of times. So if you know about that, you can do that. And don't worry, I'm going to be sharing how to do that as well. So if you want to do that, I'm going to be sharing how to do that. Okay, right now as soon as prices tap into this area, now let's look for what we're looking for. Now this is the last one. We see 1, 2, 3. Then we look for that reversal. 1, 2. This is a fake out. Then we have this third one. So we can use the Fibonacci tools and get our region. Okay, so we can buy here, but literally I like buying at the fair value gap because sometimes prices might not get to this area. So let me just buy at this area here. Okay, let me place my order here. So you can have your ahead and target a 1-to-1 ratio, and 1-to-1, any ratio you like, but I like my 1-to-1. Okay, and you are good to go. Okay, so like I said, I am not waiting for prices to break here and reverse. Okay, so the smart money concept will be waiting for price to literally just break here, break this region here. Okay, and reverse. Okay, they might be waiting for it, but we are not doing that. We just want price to slip through, return back like I explained here. Okay, this is what I explained. Where's that shit? Let's take that shit out. Okay, so that was what I explained the other time. I said I'm waiting for prices to do this, after this consolidation area, then expand, reverse, come to my fair value gap on my order block, just slip through a little, reverse back, and come down. So that's what I'm waiting for. Okay, now boom, now we have that. Okay, then after that, I think we had series of other ones. Okay, you'll be waiting for the next price above your stop loss region. So you see if you see any other thing there. Okay, so let's see if we see any other thing. Okay, so we had one, we had this fake out. So we had one. In this one, we didn't have any other thing. Prices just went up till it came to this area and gave us some kind of opportunity again. So we had just one. You must apply the candlestick pattern I taught you guys way back. So this way you apply it. So you map out your last candle. Very important. Like I said, I always say this time without number, and that is why I did not repeat it again. You want to see 3 candles below, 1, 2, 3. Then you map out the last one as well. You want to see 3 candles above for valid reversal. So you see 1, 2, 3. Okay, like I said, you want to see prices come to your fair value gap. Okay, this is your first region. I also dropped this Fibonacci retracement style for you guys, so you guys can check it out as well. So you want to see a little bit of expansion above, then you just target 1 to 1. Look at it, 1 to 1. You could do 3 to 1, you could do whatever you want, but 1 to 1 is the safest. If you are doing 3 to 1, I think you would have gotten 3 to 1. Okay, you would have gotten more than that. So it's not more than this. And for those ones that will be waiting for the traditional order block strategy, which I'm not saying is bad, means they'll be waiting for prices to break this region. In most cases, this region then reverse. Now the problem with this is that it might not reverse. That's it, and that's why I don't use it. Okay, now let's head over to the 1 minute time frame. Let's see if we got opportunities in the 1 minute time frame. Okay, so let's head over to the 1 minute time frame. All right, so the 1 minute time frame, let's see if we got any opportunities on the 1 minute time frame. So on the 1 minute time frame, like I said, the market must consolidate, expand, and retrace before you start doing anything. Okay, so understand that very well. Okay, so we're looking at the 1 minute time frame. So let's see what went on the 1 minute time frame. I think the 1 minute time frame also played out well as well. So you map out the last candle at this area, so you find 3 more candles below, 1, 2, let's see, and the third one, nice one. So you look for a nice retracement starting from the last candle that pulled that retracement. So this red one is the last one. You map out 2 above, 1, 2, 3. Okay, so having done that, I'm sorry, let me just take out all these marks away. So having done that, you put out your Fibonacci 2, and just like what we've done in the other region, we do it again. Okay, you put out your Fibonacci 2 this way, take it slightly above, then you target. Now, there's something about this 1 minute time frame, it might just give you much more classic opportunities. Like let's say you want to target 1 to 1 on your 3 minutes. So if you can combine these things, okay, let's take it through. So let's say we're looking for 1 to 1, okay, on the 3 minutes. Then in that 1 to 1, we want to go and take it on the 1 minute time frame. That is, if we get that 1 to 1 area, we will combine it with the 3 minute time frame, okay, and get more opportunities. Now if you do this now, you will see that on your 3 minute time frame, your 1 to 1 would end here. Okay, now if you combine it with that one, this is 1 to 1. If you combine it with that one, okay, if you combine it with this one, this is your 1 to 1 here. If you combine it, you will see that your target would be more better. Okay, that would be like 2.6. So I'm trying to use the target for the 3 minute time frame but I want to initiate that trade on the 1 minute time frame. But don't worry, I'm going to explain this in another video probably next week. Let's see, I'll explain this in another video next week. But what I'm trying to tell you is that this is how you could combine the order blocks and the fair value gap to, you know, bring one better trade in the market. Now it doesn't stop there. You can as well wait for trades to also tap into this area, but as you can see here, we didn't get trades to tap into this area, so it's all fine. We didn't get trades to tap into this area. So if we had trades to tap into this area, you can see that this area did not push it to break this region until prices kind of went up a little before to break this region, until prices kind of went up a little, then broke this region. Okay, so this is how to combine your order blocks and fair value gap to make a better trade. Okay, so I hope you understand this, and if you have any question, please you could just drop it on the comment section. We'll rectify it or we'll get back to you. And I'm going to be hosting my boot camp, but I'll let you guys know when I'm doing that as well. I'll try as much as possible to be dropping my analysis. Remember, I don't drop signals, just analysis. You could take it, okay, you could take it and do whatever you want with it. Just understand this, you'll be able to take my analysis. Okay, see you guys next week. Thank you.